Hello, Warriors. How's everyone doing? Hugo, how are you? Kevin, Alexander. Hi, Jeff. Nice rebound in S&Ps. So, big week coming here in the S&Ps. I think we have to stay under 3380 for the bearish momentum to continue. I have less leverage this week. Hi, Giuseppe. Actually taking a shot in the gold here, that this could just be an ABC back to this resistance at 1890. And silver, similar situation, outperforming gold today, but right back here at major resistance here. So going with the gold because it's not as strong. It's up 0.6% compared to silver up 1.6. Want to talk a little bit about the dollar. Although we've had a nice advance, compared to the risk off move, I think Grega mentioned it too. It's been somewhat anemic. That really hasn't had the same kind of gusto. Does that mean I'm going to short it? It does not. I still have to, as long as we're above, I'd call it this 93.30 level. Give it the benefit of the doubt. We are starting to diverge again. Looks like we have a 2 drive here, but not that impressed with the action in the dollar considering the move we had here. Check it out. Well, pretty deep compared to dollar strength. So back under 93.5, I think this rally has terminated. Everyone with me on that? I am looking for a spot in euro pound, but not yet. Still want to see maybe one more low, 89.40, 89.50 here. And I really don't know what to do with the euro right now. This is where I would like to buy euro. All right, down here, 114-ish. So this is where, I think that the dollar might be peaking around 95.5, 96. So this is a long-term entry down here. So I'm starting to think about long-term entries because it's going to be pretty wild here. And the yen was something I wanted to talk about because you have this wedge developing here. See this? And I thought there might be another attempt down here, but we start getting back over 105, the end's going to look good. I still am in the camp of higher yields. I'm starting to have more company on the yield question, and yields are down a little bit today. But when I look at the daily, I don't want to fade this trend. I still think there's more upside in yields. Okay, and that may help the dollar a bit to achieve this bear market rally. So I'm not long-term bullish a dollar. Actually, think that a move up to here might be the best dollar short of the year. Okay, so let's see if we could get it. And one more break in gold. I really don't like being short metals because of except for the technical formation, because there's an awful lot of bearishness in gold, especially after last week. If you look at the DSI, both gold and silver are under 20. Okay, so it's not like there are a lot of bulls out there that it's overdone and a lot of people to wash out. But I still think there might be one more shoe to drop that could take gold back down towards 1830, 1820, maybe with this speed line. Let's see, that's not going to show it. Let's go with this. So I'm getting this message on TradeView past couple days. This speed line comes in at 1820. Okay. All the way down here. That may be it. And I just wanted to make one comment about crypto. You know, all last week, everything was liquidating out, right? You had gold down, you had the market down, you had the dollar up, and Bitcoin was resilient until we got to 14,000. So actually on a relative strength basis, crypto seems to be where it is, the relative strength. So I think that it will succumb, especially if we're going to 3,000 in the S&Ps, and that we could go all the way back down to, I think Peter Goodburn's saying 9,000, and that'll be confirmed if we negate the breakout, say about 12.8. So keep an eye on those levels there. Any questions? Does everyone know how to subscribe so you're in our chat room for the election? You guys know how to do it? So you could have a good month this week, hanging out with the crew. You just go to home. You know, you're subscribing now? Beautiful. I don't think you're going to be disappointed. Okay. So I know Blake's going to feel very energized. He gets to sleep an extra hour. I don't. He does. Welcome, Blake. You lucky guy.
I know it really is great. I went to sleep a little early last night. I got a full night's sleep. It's actually I honestly I got
all right.
up.
No, I don't want to hear about it anymore.
No, I got up early
because you're
twice,
biorhythm.
and I had to force myself, like, hey, you've got a couple. It's 2:00 in the morning. Go back to sleep.
Yeah.
You know,
Yeah,
I did a lot of that.
Isn't that nice? I woke up at like, I don't know, 5 to 4 before my alarm went off, and I go, oh, maybe I have some time to go back to sleep. And I said, well, 5 minutes. I don't think so. I'll get up. But it's a good feeling when you wake up and you still have some time to sleep. So
yeah.
anyway, I'm glad for you. I'm sad for me.
Yeah, no, it's a little sad, isn't it?
Yeah, especially with the pandemic and political chaos. Anyway, it's going to be a wild week, don't you think, bro?
It should be. Hey, can you give me a test?
What kind of test?
Okay, there we
Urine
go.
test?
I was just adjusting my speakers. I don't know why my
Oh,
speakers
okay.
were...
I stayed up all night studying for a urine test once.
No.
I pulled an all-nighter. Anyway, so is the blog done?
Oh, I'll have to let
the guys
explain that one.
All right.
Yeah. I know I promised everybody a blog, and then we got no blog. And but it's the blog is down right now.
Oh, that's right. The blog. Yeah, I saw that the blog, the site, that part is down.
Yeah. And you know, we're trying to get it up and running right now. But
okay.
You know, the blog's been... Hey, the good news is the blog post has been written for a couple of days, so that's
all right.
So it should be out anytime.
So the race is tightening, bro.
What's that?
I guess the race is tightening.
It is. It is. I'm going to take over the screen right now. The race did you say the race is tightening?
Yeah, that's what I've been hearing, you know, that it's tightening a little bit in some swing states.
You know, I think it is. It's I'm going to be happy, and I'm sure most of you guys are going to be happy when this is over. Yeah, when we're finished here. It's you know,
how long will that take?
I don't know. You know, I'm thinking, well, you know, there's a couple key states, and the states that I think that we really need to pay attention to will be Pennsylvania,
yeah.
right, and Florida. The fact is that if Trump like loses Florida, it's going to be really tough for him to win. From the analysis that I've read, it's like if he loses Florida, it's like his path to winning is going to be really difficult.
Well, no Florida tonight too. There are a few states that will fully report tomorrow night. Florida being one of them, I believe.
Yeah, and I don't see. I actually see Trump winning Florida. It's just that doesn't mean anything. How
about Arizona, where you're at, Blake? That's an important one.
I think it is more for the Republican Party, not so much for Trump. I think Arizona is one of those states that Republicans will be watching in case we turn blue, and we're really it's a very tight race here. So that's something to pay attention to. I actually think Arizona will stay red.
Let me ask you one more question. I'm going to let you go. Are you looking to do anything but day trade this week, Blake?
No, I'm just looking to be very, very short term. Well, I take that back. It depends. It depends. Like
if you have a lead and you could let it run and tighten up your stops.
Yeah, or if I'm like, if I'm sitting here trading and I'm like, oh wow, we gotta, like let's just say, I mean, this is not going to happen, but let's say Texas turns blue. It's like, holy cow, Trump can't win, period. And then you have to make a decision based on what the market's doing because of that.
I think Paulie thinks it's going to turn blue.
I think he does, but I don't agree with him. I don't think I don't think it will, and I think I'm probably in the majority. But again, it's just what I decide to do mostly will be a result of what happens tomorrow night and the states that are winning or have said that they won, that type of thing. And then I'll make my decisions based on that. And I'll be in the chat rooms talking about it. So again, if you guys, want to have
an all-nighter tomorrow night.
Yeah. I mean, I'll probably be pulling an all-nighter tomorrow night, or at least I'll be up pretty late. And, that's just part of election night. And just kind of seeing where we go from there. So it should be interesting, to say the least. So that'll be it. And what we've got to do really today is prepare for, what I think today is going to be pretty choppy. And, I don't see today being super directional. Although right now the Aussie is making highs on the day, the Kiwi's making highs on the day, the dollar Canadian's making lows, which is typically a risk on type of, market signal. So let's take a look at where everything's at and let's get the bias chart done and kind of get set up for tomorrow. I think tomorrow is going to be a little bit more telling as far as our ranges of where we are at and where we should be. Okay, so we're going to start with the euro, and the euro dollar. It's surprisingly holding near last week's lows. I mean, it's not very strong at this moment, and that really does concern me regarding the euro. I would have thought by this time the euro would have been a lot stronger, and that really the dovish attitude of Christine Lagarde really is weighing on the euro as a whole. So, and again, do I think that the euro can go higher from here? I do, but it's trading really heavy. Hey, excuse me, really quick. Steve, is Steve or Stelios here?
I'm here. Good morning.
Hey, Stelios, can you take over for just a few minutes? I got to deal with it. My time change is different, so my dogs are like, I got to let them out really quick. I can be back in just a few minutes. And then I'm gonna finish up. I'll start up the bias chart. Okay.
Yeah, sure.
Thanks, man.
Hey, Stel.
Hey, how you doing?
Good, buddy. So, what are your plans for this week?
My plans for this week. Well, I'm going to be looking. Let me take the screen just for one
Go
second.
ahead, bro.
Share screen.
Are you getting the same thing, same messages,
No, this
unresponsive?
This has to do with your web browser, not the site itself. So I would suggest just killing the web browser, restarting your laptop, and just starting over. It just means that one of the pages is really heavy on your resources. That's what it means.
I see. Okay.
So what will I be doing? I will be reacting to what happens. But in my opinion, there is one scenario where I think it's going to be very risk on, and that's blue sweep. Biden wins comprehensively everywhere. I think that's maybe not in the very short term. There's going to be a little bit of volatility in the beginning, but I think overall it should be a risk on move. Biden will be able to push anything he wants, any kind of bill, anything, and with no resistance, then they can just go ahead and do whatever they want. And what do the governments want to do? They want more of everything, right? So I think equities are going to be doing well in that scenario. But in my opinion, every other scenario is not going to be good. And I think there's a good chance that there's going to be a little bit of trouble. I don't think that Biden's going to win by a landslide like a lot of people do. I think it's going to be a lot closer. And remember, we're not going to know the results straight away, or at least that's the theory. I was reading something Trump said. Was it yesterday? I think he said that he's going to announce. If he has a lead, he's going to announce that he's won on the election day, and then and he said, I think he said the words that they're going to try and take we win, and then they're going to try to take it back in the next few days or something like that. Which is, you have to count all the votes. You can't just announce that you won and move on from that. So I think there's going to be a little bit of trouble. I think there's going to be volatility, and I think most scenarios are risk off. But there is that one risk on scenario, and frankly, if there is a blue sweep and that happens, I'm just going to get long risk wherever the market is. I don't care, because I'm not a day trader. I'm just going to start getting long risk with a more medium term view. So
if that happens, I know you were looking for the potential of a dollar spike.
Yes.
To the upside. Do you think that scenario would create a pretty big downdraft in the Dixie?
Yes, I think. Look, this is the DXY chart. It could be a false breakdown. It could be, wham, straight away down. I think there's going to be a little bit. It's not going to be as clear. The results are not going to be clear straight away. So I think that's going to probably drive a dollar spike higher, and then we're going to go lower. So, I mean, obviously, this is one scenario. The other scenario, we just keep going lower. My medium-term view for the dollar is to go lower. That's without a doubt. But I do think we are at risk of a spike before that, and I'm kind of hoping we get that, because then I want to get into some trades. We've talked about these here, gold and silver, and maybe some dollar pairs and equities as well. I want to get long equities, but not right now. So I think that's the risk, and frankly, I think the market is really not pricing that too much at the moment. I think the market is thinking, yeah, Joe Biden is done, and we have something. It's not exactly the same thing, but it's similar. We have this far right neo-Nazi party. At least we had it. They're now in prison, but we had this party here in Greece, and the previous elections. They were polling at like 4 or 5%, and we were thinking, Jesus, how come they've gone from 0.1% to 4 or 5%? They actually got 9% overall. So people who were going to vote for them didn't say it in the polls. They were, I don't know, they were embarrassed to say it. It was like a vote where people are just frustrated with everything and go, right, we're going to vote for these guys. They're going to clean the place up. And that's what happened. And now they've gone back to zero, obviously. But, I think there is a chance that in the polls, people are not saying what they're going to vote for. So the polls can be wrong. We saw that 4 years ago in a big way. And I really do think it's going to be close. Of course, I could be wrong. I've been wrong many times in the past, but I think it's going to be closer than people think.
I think so too, Stelios. I have to agree with that. And one of the other things that I think is true in this situation is that the polls have really adjusted as well. You know what I mean? They've adjusted because they were so wrong in 2016. They automatically have to give Trump a couple points just because of their mishaps from last time. Does that make sense?
It does, yeah. It does.
Yeah. So and that's one of the other things that, you know, makes me believe that we might have you know, well, I don't know. I still think it's going to be close, but then again, the flip side of that is if pollsters have been giving a big, you know, bigger lead or a less of a lead for Biden because of how wrong they were, maybe it ends up being a landslide victory for Biden. Who knows?
That is one of my main case scenarios why I say that it's a higher possibility scenario, because we've had this experience here with the referendum in Greece, Blake. I mean, the polls were wrong, a lot wrong, and it happens that Katerina has a very good friend that is a statistician and works for like the biggest poll companies here in Greece, and he had told us that, you know, they had to go check, you know, what they should change, what they should do to adapt for, you know, the new reality that people often aren't frank with the polls, and a lot of people don't want to express their opinion, so on and so forth. And indeed, they made it so. Next elections we had, the polls were very, very, very close to the real outcome. So I 100% agree with your comment.
Yeah, and I mean it's a possibility. All right, guys. Well, hey, I appreciate your feedback, and Stelios, thanks for stepping in, because I actually had to. My dogs think it's an hour. Well, it is. I mean, it's their normal time. For me, I'm an hour later. So they're like, hey, let us out. I'm like, okay, I guess I got to. So I'm gonna take over here, and then we're gonna go ahead and do the bias chart really quick. I'll get that out of the way. And I want to thank everybody for your patience, and thanks everybody for your patience regarding the blog. Steve, do we have an update on the blog?
It's not from our side. So we've already opened the ticket for customer support to see what's wrong with that server. It's nothing we can do, or it's something we can have done right. So we're just waiting now.
I'm about ready to start taking screenshots of the verbiage. I'm going to start tweeting it out if that's where we have to be. So we'll see. It should be up.
I think we should. Yeah, I think we should resolve the issue, you know, within the next few hours. Exactly.
Okay, so let's go ahead and deal with these charts. As I was saying a little bit earlier regarding the euro is still trading really heavy. I'm really surprised, actually, quite about how heavy it is trading, even with the dollar weakness that we've seen. You know, you've seen the Aussie reverse strongly off of the, you know, the 70-cent level, or the pro below 70 cents. You see the Kiwi near its highs of the session. Look at the euro. Euro's just not doing anything, and that's really nerve-wracking. If you're long the euro right now, I think that is a big risk for the euro. Now, I think while the euro trades below this previous support right here at 116, well, actually we can write down 117, but just to make it even. But I believe that while we're trading below here, it's going to be, you know, you got to kind of target 115 at this point. And because I do think 115 is the target that we're all kind of waiting for. We've been waiting for it for weeks and months, but, you know, I think it could easily be achieved, knowing how heavy it's trading right now. Obviously, support's going to be these trend lows. So let's go ahead and write those two levels down. Support being here at 116.10. I think that's the exact spike low right around there. It's 116.11, but I'll just write down 116.10. Whoa, I did not mean to do that. And while we're below 117, I just I don't really want to put bearish, although I'm bearish I'm bearish intraday. Well, what happened here? The dollar is just look at the dollar Canadian. Dollar Canadian is just free falling. Oh, look at crude. Crude's ripping. That could be a reason. Huh. I don't know why the dollar Canadian's selling off pretty aggressively, but it is. So just a little heads up there. Cable's moving up a little bit. Yeah, I don't know. I'm not too sure what's up with that. Anyway, okay. Going back to the euro. We're going to get to that in just a second. So the euro, I want to put bearish, but I don't want to put bearish. I do, but I still think we're in a range. So I'm going to keep it in a range just because it is ahead of the election. But just keep in mind, I do think it's a little bit bearish here. The cable, we had a little bit of a false breakdown below the 618 retracement. If you use ForexAnalytix, you already knew that, an hour ago. Even if it was just, if you weren't paying attention earlier this morning, we kind of had this false breakdown, might get a spike back up towards this. We've almost filled the gap from overnight, which comes in, I would say roughly around the 129.50, 60 level. But I do believe that this trend line is going to offer resistance, and that's where key resistance is going to be, which is 129.84. Support is right here at this 128.60. I think it was 128.66, which is 618. Okay. Let's take a look at the Aussie. So the Aussie probed below the 70-cent level, couldn't hold. That was 66.92. So I'll just write down 66.90 as being support. I'll just write down 70 cents. That's obviously been pretty key. Just because we probe something by 10 or 15 pips it doesn't mean more than, we're just kind of probing. So, resistance would be, let's see, the 38% retracement comes in at 70.54. The 50% comes up with these spike highs. That comes in at 70.73. So I'm going to write that down. That 70.70 is really resistance for the Aussie on rallies. Kiwi. We have this confluence of support here. That confluence is let me go to an hourly and I'm going to show you. There's from that low right here back at the end of September to the highs. That's a 618 retracement from this last low of this trend right here. The 78% retracement came in at the same price. So that confluence was at 65.90. That is support. I think we wrote this down last week too. Resistance now.
Be back in a minute, Blake.
All right, bud. My assumption would be trend line resistance comes in around 66.40. I'm going to write down 66.50. This should probably offer resistance today. Okay. Dollar CAD. So the dollar Canadian, it's interesting. We had this really big sell-off that just happened over the course of the last 30 minutes. I'm not too sure why, but we were at 133 and all of a sudden you know, we sold off pretty aggressively here.
As you said, Blake, crude
Huh?
went from, as you said, crude went from almost minus 6% on the day to almost flat. So that's a big move.
I'm guessing that's probably what moved it. I'm not too sure, but it was a pretty big move in crude. Let's see where we're at here, because this is the previous high right here that we were watching, the dollar Canadian from last week. Remember, it was 132.50 or 132.60. We're back at it. So let's see if it coincides with any fib levels too. Let me delete this. I'm going to delete this. This stopped at the 88% retracement, in case you guys didn't see it. Right here, right? So let's delete that, and let's figure out if we have any fib levels coming up, because we may have some support right where we're currently at. Oh. So the 38% retracement comes in at 132.71. We're slightly below that. And the 50% retracement comes in at 132.51. So I'm going to write that down. 132.50. So any move back up towards 133, well, probably any move right back up here towards 133.50 it's going to offer us resistance now. So even if we bounce here, yeah, 133.40, 133.50. Okay. Yeah, I mean, look at crude. We were down, and now crude is actually flat on the day. Pretty amazing. Pretty amazing move in crude. All right, here's the dollar MEX. So the dollar Mexican peso, not really doing a whole lot. We're still capped by that 21.50 level, which we talked about last week. Support at 21.10. Still think we need to watch the dollar Canadian, because, or dollar Mexican peso, because it's holding up really well. If there's any sense of risk off over the course of the next couple of days, I think you got to watch the dollar Mexican peso, because if you guys recall, you know, it's been finding support. This longer term support down here is pretty key. This 2080, you know, 4, I think is what we'd written down before, but it's like 2082. It's really critical, and we haven't really been able to break down. So if we get any type of risk off, this should explode. And 21.54 is the 38% retracement. So I'm going to write down 21.50 as being resistance and 21.10 as being support. Okay. Dollar Swiss. So the dollar Swiss continues to make its move back towards 92. Remember, 92 cents has been a big resistance level, and now it's also the 618 retracement of this move lower. So I would assume that 62 cents, or 92 cents, excuse me, is resistance today. Support on dips. I'm not 100% sure. I don't want to give it back all the way back to 91 cents, because I don't think we're going to make it there today. But this breakout point here at 91.25 should offer support on dips. I mean, look at how heavy the euro is. And the euro the euro can't even get out of its own way right now, which is kind of crazy. I know we were just talking about it, but it's like, man, I can't even hold a bid. US dollar Norwegian krona. Now, what's interesting about the US dollar Norwegian krona is it didn't sell off, not like the dollar Canadian. So look, if the dollar Canadian rallies or crude oil sells off or the euro sells off, the US dollar Norwegian krona might be at risk of breaking out. It really could be. Let's write down. I don't even want to write down these highs, right? Well, I will. Actually, it's 960, but I think if you're short US dollar Norwegian krona, you got to be really careful. Okay. Dips down towards 942 should offer support, or 940. Actually, I'm just going to write that down because that's what we had all week last week. Dollar index. Okay. So the dollar index, we moved past resistance here that we were monitoring last week, but I don't think that, I still think we could be consolidating ahead of the election, which if you actually extend this triangle out to today's highs, right, to right here, this is a more of a symmetrical triangle versus what we had right here. So I think you could still argue that, hey, maybe those highs are it. Support is at 93.60, resistance at 94.25. All right. Dollar yen. So last week, we talked about how the dollar yen's just not sustaining sell-offs below 104.50. Right now, we have to get above 105 in order to squeeze. But I think while we're between 104 and 105, it's just kind of a range here. I do think the dollar yen's going to move eventually. I'm just not convinced on which direction, because when you look at from a correlation standpoint, it's hard to draw conclusions that the dollar yen is moving with yields, or it's moving with the dollar, or it's moving with risk. It's been tough, and even the guys in my office that I trade with every day, they are really, kind of conflicted as well on the directionality of the dollar yen. So, all right, let's talk about gold and gold and the equity markets really quick, and then I'm gonna let my colleagues take over. So here's the S&P. So still in this consolidation here, we're holding above. I'm gonna write down 3250 as support. Resistance intraday. Let's think about this for a second. As I've mentioned to you guys before, I think we're going mid-range by the end of, oops, excuse me. We're going mid-range by tomorrow. But right now, the 38% retracement is going to come in right around that spike low. So that's going to be at 33.55 will be the 38% retracement. Okay. So support is going to be 32.50. 33.55 will be resistance. 32.50 being the previous triangle support right here. It's actually 32.60, so let's write that down because it's a rising trend line. So, and let's take a look at gold really quick. So gold, very strong. It was strong on Friday. Oops. Continues to hold up really well right now. We are probing this. Remember, we were I think last Friday we wrote down 1890, and we're here right now. I'd give it a little bit further than that today. $19.03 is the 618 retracement. So I'm going to write down 1900 this morning, intraday, and support being back here at 1875, because 1873 is a spike low here. So I'm going to say 1875 is going to be support. All right, guys.
Good job.
Well, it's a range, and it's going to be a little challenging between now and tomorrow. I don't think you need to get really directional right now. Just watch the ranges and try not to step into FOMO, and just be careful, right?
Yeah. Home on the range.
I know.
Biden
Hopefully we'll have some
Trump
corrections
acting strange.
We'll be more directional by the end of the week. I think we will. So anyway, Stelio, Steve, I'm going to hand it over to you guys. My timing is a little off this morning because
you slept longer.
I slept in, and everybody's
going to hear about this.
It's going to take me a couple of days to get with it. So
I hope you'll adjust to the extra hour.
I'll see you guys on the daily roundup.
All right.
Thank you, Blake.
All right.
See you later, mate. Okay. Bye-bye.
Steliosis.
So the main event is the elections tomorrow. We talked about it a little bit. I think it's going to be a little bit in the air. And
abortion.
Otherwise, apart from the elections, it's a bit of the same. We had some numbers, some PMIs today. Who cares about PMIs, right? They were a little bit better than expected across Europe. So that's in line with kind of like a nice little recovery. We're still way below pre-COVID levels, but we're getting slowly higher. But the bad news is that we have COVID cases rising. I don't want to say exponentially, but they're going high quite a lot. And there's now lockdowns. We're having lockdowns in Greece, and I'm reading about Italy and Spain and UK a month. So this is not good for the economy, and government's going to try and subsidize this, but really the effects are not going to be temporary, unfortunately. At least part of them, I think, it's going to be a little bit more long-lasting. So you can't really be mega bullish on anything in these circumstances. But clearly, the markets, equity markets today, seem to think that it's okay. It's all okay.
I read that
everything is okay.
Yeah, everything's cool. I read the UK will be closed till the end of the year, but the Tories will push back around Christmas so people could, sing Christmas carols.
Shop their COVID meds.
Yeah, I mean, look, it's even striking home, isn't it? COVID.
Oh yeah. Here they're locking down
restaurants and gyms and everything.
Yeah, the U.S. is 3 weeks behind. But if Trump wins, there won't be a lockdown. But do you think there will be if Biden wins?
I don't know, but I can tell you one thing with absolute certainty. It's a lot more likely. Nobody can doubt that.
Yeah. I mean, we're almost at 100,000 cases a day now.
Yeah.
New highs.
That's scary.
It is unfortunate, but it is what it is.
Yeah. I'm dead if I get it. So you guys better start looking around.
I think that you should try not to get it, but I think that as an assumption, it's too bleak. I don't think it's nowhere near true.
Okay.
I mean, you shouldn't.
Thank you.
You shouldn't, for sure. But
I feel better now.
Yeah, but I don't think your prognosis is as bad as you just described.
Dr. Steve has spoken there. So.
Yeah.
I mean,
I thought he was a Greek economist.
He's a doctor of love.
Yeah, we've had cases of people of over 100 years old, and you can't be over 100 years old without some health issues, right? We can all agree on that.
Yeah.
That have recovered.
Yes. Anyway, it is what it is. So let's see.
Sucks.
Okay, I don't have much else to say, really. Tomorrow is going to be the big day, so wait
for sure.
That.
For sure, Stelio.
Yeah.
By the way, the huge spike in crude that, of course, took with it anything that's correlated is due to Russia There is a report that Russia proposes delaying an increase of output from OPEC. So that's what caused the spike in crude, and that's what, of course, caused the move lower in USD CAD that we see here. Nice rejection from the previous area, but that's not enough from a technical perspective to say that that's it, we're headed lower from here. I think there is still a chance that we can see a higher high before we can actually resume lower. Of course, there is also the possibility that this is like some type of a bigger triangle here.
Yeah, the dollar looks like Canada. They almost look, very similar, not taking out the prior high.
Yeah, there is a possibility that we have something like this in hand. So if we do break lower from this trend line support, I think that we're just headed to new lows for one more low, which I think inevitably will happen. The question is, have we already found this intermittent high, or do we need to push a little bit higher towards like 130? 136, I mean. So that, that's the question that remains to be answered from a technical perspective, in my opinion. Because in any case, no matter how you look at this, even if we push a little bit higher or if we stay in a triangle, this type of a reaction definitely isn't some kind of an impulsive, the beginning of an impulsive move higher. Here's USD NOK as well, doing the exact same thing, retesting the previous area. So far, it's holding. Definitely the reaction from that zone not as strong as the one we've seen in USD CAD. So, my main case scenario remains that we can easily see one more push higher. 980 and 1011 are the two areas I'm interested in selling more USD NOK. But I agree with what Blake said before, that for the time being, doesn't look like being short as a short-term trade is the place to be as we speak, if you're a short-term trader, of course, because it totally depends on your trading style. Now, Blake has already covered the main FX pairs. Just to revisit here the DXY before I go to other stuff, I just want to reiterate here that I don't know if we should see this whole area on the chart as one big consolidation, which there is a big good case to be made that it is, or if we want to look at it as something more complex. What I can tell you with certainty, though, is that I see nothing bullish. I'm not saying that crude can't continue higher towards like 95, 30. I'm just saying that I don't see the bullish case here. And I don't mean from a fundamental perspective, which I definitely don't. I mean, I don't see it from a technical perspective. So even if we see a short-term reaction higher in the DXY and in dollar pairs, I'm definitely remaining, on the bearish camp.
Doesn't that look a lot like Canada that you just showed? Almost identical.
It looks very similar to it. And I mean, that's not like a huge surprise.
They're both dollar pairs, right?
Yeah, exactly. One is a dollar index and the other one is a dollar pair. So, that's not a big surprise there.
Now, I don't know what surprises me. I guess after I've done this for another 30, 40 years.
I wish you can do it for another 50.
Not me.
Yeah.
Going back to our favorite metals, nothing really to report here. I mean, gold and silver, they had a nice reaction lower last week, but I mean, especially look at gold. Has something really changed? No, nothing has really changed here. I mean, I still see a consolidation in time rather than price. And especially as long as we trade above like 1820 roughly, I don't see a bearish argument. I mean, it might push lower towards that zone in the short term, but I wouldn't be shorting this. As simple as that. And I think above this trend line resistance, it's gone. That's it. I think we're going to start seeing big moves once again to the upside, and people are going to try to chase it higher, or even worse, people are going to be looking for a pullback to buy it, and they might not be getting these pullbacks once it breaks higher once again. So, I think you want to trade it unless you're a scalper or a very short-term trader. You are either long or on the sidelines. That's my personal point of view. Silver, more or less same case. I was really hoping to see a move towards 21, a lower low. There is still a possibility we might see a move towards 21, but you can't count on that. I mean, it might happen, but you can't count on that. I mean, a friend of mine was asking me the other day, he's really got interested in buying, physical silver. It's like, where should I buy it? I said, you find it anywhere between 19 and 21. You just buy it. End of story. So that's my exact belief about it. Now, natural gas, quite a nice reaction lower today, but we're comfortably above 290. So nothing really changes here above 290. It's like bullish. That's it. Now, crude oil, interestingly, today tested. Actually, this is a wrong trend line now. There it is. Yeah. So yeah, crude oil, interestingly, today tested the confluence of the equality target, first leg lower to second leg lower. Also, this horizontal support area at 34. We actually bridged through it temporarily. That was my minimum target, right? I'm not saying that I like to buy at 34. If I did, I would have already bought it. I'm hoping there is more downside to it, but I'm saying that from a technical perspective, we've already fulfilled the minimum target for correction here. So just keep that in mind. Now, having said that, I think we need to see more, evidence that we've actually bottomed out. Same thing can be said here about the S&P. S&P found support in this zone once again, quite a nice reaction higher. But in order for anybody to say that we've actually bottomed out, we need to see more evidence. As simple as that, because this 3,200 and change area is an area of support. I mean, you can clearly see it going back in the chart as well. So for the time being, this whole thing can be like a bigger consolidation. I think there is a very decent chance to see a rally higher without even seeing a lower low. I think that any type of scenario in which we get a result almost directly, and the market thinks that's a very low probability scenario. As I said many days ago, I think it's a higher probability scenario than the market prices in. I think that initially it's going to be perceived as bullish from the market, because people are going to be initially focused more on unpricing turmoil and a period of time, who knows, it's going to be weeks at least, that the election result gets contested, and who knows what happens. I mean, we might see riots and I don't know what else during that period. So any result that's more or less definitive, I think it's initially going to be perceived by the market as bullish, regardless of if it's like Trump that wins or Biden that wins. So I mean, I do see the possibility of not seeing a lower low here. Now, out of curiosity, which I almost never do. I mean, I'm never do since years ago. As I've said, I've been reading like banks analysis on election scenarios and what they think is bullish and what they think is bearish. And to make a long story short and save you the time, I can tell you that they don't agree. I mean, there are banks that believe that Trump getting re-elected is bullish. By the way, common economic sense would say that that's the case. From a very simple perspective, I've said it before, from the perspective of corporate taxes. Stock prices in the present is a discounting mechanism of future income post-taxes income, of course, for the companies and, of course, for the stockholders, right? So theoretically speaking, and supposedly practically speaking, higher taxes means that lower stock prices would be needed, to make up for it. So theoretically speaking, Trump victory should be better for stocks if we just isolate the picture in taxes. But there are banks that believe that a Biden win, especially the so-called blue wave, is going to be very bullish because there's going to be almost no limit to stimulus, and I do agree more or less with that. I think that if the Democrats get everything, so they don't need anybody else to make such decisions, I think we're going to see even more stimulus than under any scenario. I mean, I do believe we're going to be getting more stimulus no matter who wins, Trump or Biden, no matter who gets the Senate, because I think that everybody agrees that there is no chance that the House of Representatives just switches to Republicans. We're going to get a lot of stimulus, but I think we're going to get even more if Democrats have the Congress and, of course, the White House. So a lot of banks believe that it's all about the stimulus, which it might as well be, at least until it stops working. So I don't want to make any predictions because really you can't be certain. I think the only certain predictions are that a contested result is going to be short-term negative. A contestable, let's say, result is going to be short-term negative, and a result that's going to be definitive is going to be at least short-term positive. I think these are the only two things we can be certain about. Everything else, I think we have to wait and see. And frequently in these events, and I'm going to close this chapter with that, frequently in these events, the initial reaction is the wrong reaction. So keep that in mind.
Yeah, like 2016.
Yeah, but I'm not saying that only due to 2016, and you know that better than anybody, Dale, because you've been around for many big events.
It was pretty quiet after Lincoln won re-election. Thanks, man. All right, anyway.
Yeah. That was a good one.
All right.
So yeah, I think you have to be patient, and I think that trying to make a killing on election night can work out or kill your account. So
yeah,
it's up for you to decide if that's the kind of trading you want to do. Personally, I would strongly advise against it because, as I said, you can either make a killing or get killed. So I think it's better to stay safe and see what's actually going to happen and then reassess than try to become rich overnight, because I've seen that happen very frequently, and especially it's human psychology. I've seen a lot of people be very aggressive with the way they trade when it is to trade in favor of their candidate. So if their market thesis goes along with, for example, their favorite candidate like winning, I see that they frequently are more aggressive. And I think that, having to do with trading, this is not a thing or a night you should be, working on emotion. I really think that it's,
prudence over valor.
Yeah, the totally wrong approach.
Yeah. Yeah, it's okay if you do nothing until the dust settles, right, bro?
Yep. And as DJ says, bulls make money, bears make money, pigs get slaughtered, and I'm pretty sure we're going to get a lot of people getting slaughtered, on election night. Unfortunately, as I said, in every big event, you get a lot of people that get slaughtered. So at least, begin and try to begin the night by making sure you're not going to be one of those getting slaughtered. So let me see what else we need to cover. Let me go through some of your questions. Natural gas, we did talk about that. Platinum, we didn't talk about that. Who do we have for an interview today, by the way?
Mystery Trader 99.
Oh, okay.
You know his his thesis about parity.
Yes, that in essence, FX pairs will gravitate.
Right.
The major ones will gravitate towards parity, which of course implies a very strong dollar, right?
It should, yeah.
Yeah,
it would.
Yeah, which, as you know, I don't agree with.
I know.
Nothing is impossible, and I'm open to change. I mean, if I see a technical move that shows me something totally different, I'm not going to be losing my money just because my fundamental thesis is for a weaker dollar. But for the time being, I really don't see the ingredients in the mix to get a strong dollar move. If something changes, you're going to be the first ones to know. I mean, if something changes in my perspective, you're going to be the first ones to know.
Yeah, I think the real battleground, should the dollar extend this move, would be in the 96 to 97 range.
Yeah, I tend to agree with you. But for the time being, I don't see anything bullish looking at the dollar and the major dollar pairs. So, I have no reason to subscribe to such a theory, but that's what makes a market, right?
Yeah. Mm-hmm.
I mean, it's very healthy. I mean, I've seen people that I disagree with make tons and tons of money. So, let's find out. Having to do with platinum, I see a corrective move here. For example, metals is one thing that definitely doesn't point to dollar strength, right? No matter which metal you look at, platinum, palladium, copper, nickel, silver, gold, I mean, all of them point to dollar weakness. So, that's something I take seriously into account. Let's see what else we have. Nifty and Bank Nifty. Nothing has changed since the last time you asked, my friends. Nifty, here it is, near the highs. What type of a correction we have. Initially, it looked like a triangle. It might not be a triangle. It might be like a bull flag. But for the time being, this correction looks more or less, this move looks more or less like a correction. Bank Nifty approaching resistance once again, so be careful with that. USD INR, there it is. Be careful here as well. Retesting this previous support area as resistance, so let's pay attention to this. So far, I'm not seeing this move higher being impulsive, so I think there is still a chance that we're going to see it turn to the downside. So that's all I have to say about it. Use the ruble, by the way, since we were talking about it, Dale. On its way higher, as we've said before, the key area of resistance is like 82, 80, let's say, towards 83. That's going to be like a major area, because above that we trigger like a massive cup and handle formation. I'm as I've said before, from a macro perspective, I'm looking to be long the Russian ruble for a long period of time, but I don't have the technical confirmation yet. So, I have a thesis, but I don't have something that will get me, triggering a short position. If we do see a rejection though and a turn lower, and we break through this red channel, that can change things. We did break the red channel before, but that's why, it's not only price, but it's also structure. I mean, there was no way I would short a move that unfolded lower in such a corrective manner. So as I've said before, it's about having specific levels, but also paying attention to how price develops. because there is a way you can break through a level, and there is a very, very different way you can break through a level. Anyhow, is your guest here, Dale? Because we're already 5 minutes past the top of the hour.
Yeah, and my guitar's out of tune. Yes, he is.
Oh, okay.
Mystery Trader is here, and we're going to unveil his mystery today. I'm going to, Alex, I'm going to make you a panelist. And going to ask you to unmute. Welcome back, Mystery.
Hey, Dale, how's it going? Can you hear me?
I can hear you loud and clear, brother. How are you? How have you been, Alex?
Perfect. Doing good. Good to hear your voice again.
Yeah, yours too, man. So, you could go ahead and share your screen. And I know that you've been approaching this as a continuum of your narrative of dollar parity with a lot of different currencies, everything moving towards that $1, even all currencies kind of in the same place before a reset. Is that still the narrative that you're, have conviction about?
That is, yes.
Okay.
Let me see. I just want to make sure I'm sharing my screen correctly.
You got it. Yeah.
Oh,
Yeah.
perfect. There you go.
Okay. Looks like you prepared a nice little PowerPoint. I'm going to stop interrupting and let you go through it, bro.
No, not at all. So today, obviously, is special day. Obviously, it's the day before the U.S. election. So I kind of want to do a bit of an election special. Normally I'll talk for an extended period of time, but I thought this time, I'd make it a little bit more brief. We go over all the currencies together, and then towards the end, we kind of discuss. I get a lot of questions about what about potential outcomes of Biden versus Trump. Yeah, so we kind of like make it more of an election, kind of more interactive and more of a discussion. So feel free to interject at any time you want to.
Okay, buddy.
We get started, but yeah, so let's get started here. This is obviously part 5 of the global Forex parity. I still believe that everything is starting to line up as before, but in order, let's recap what happened in part 4. Some of the things that were predicted, some that came true, some that did not. First and foremost was obviously there a potential major currency reversal I predicted last time would happen potentially somewhere between October 2nd and October 30th. We did start to see a bit of a Europe top, macro top forming, and a DXY bottom starting to form. It did hold that big 10-year channel, which I'll show here in a bit. But it managed to hold, which was our first sign of confirmation, but there still needs to be more follow-up, but we'll kind of go through that in a second. And then there'd be some sort of equity market weakness before the election. Some of the potential catalysts could have been Biden leading the polls or COVID second wave. Both of those appear to be coming true. The one thing that did not, as of right now, is gold hasn't run up past its previous high. I'll explain in detail why it hasn't. And then obviously Brexit, and Italy, even all these other sovereign crises, whatever you want to call them. So far, they haven't had any material impact yet. And they seem to be, there's no real sovereign issues yet. So that didn't happen. So let's go over
I interviewed a guy who thinks the epicenter is going to be out of Italy. Are you seeing the same thing because of the Italian banks? And politically, Italy is what you call it. So
yeah, I call it Italy. Yeah, it's
I like that. So you see that happening next year?
Out of the 3, it may potentially be the weakest. I don't know if they've also been hit really hard with the coronavirus as well. I'm sure that's had a large economic material impact as well. I mean, they used to be the epicenter for COVID. So obviously that's a big part of it. So right now, I think it's still too early to tell. But today, I think just news this morning that Britain and European Union are starting to have some compromise. So maybe it may not be Brexit of those 3. That's probably the least of the 3 as of right now. But I mean, that can change at any moment. So we'll go over the 4 major currency pairs in the Forex update. First and foremost, this is the euro dollar. Obviously, this is the downward bear channel continues to hold. Last time we came, it was this full green candle that had just gone up and touched that upper channel boundary, and then we had an initial reaction back below the 200 monthly moving average, and then now, as of Friday, which the month closed, October, it formed a red inverted hammer. So as of right now, stochastics are also peaking above the 80 level. And for most part right now, as of right now, it appears that this channel boundary is holding. Now, some people say, well, what about when you compare it to the previous 200 monthly moving average rejection? It then had a secondary move higher. And they say, is that possible? I mean, in theory, it is. If it does, it would negate the entire bear channel, and it would actually put the global forex parity theory.
That was a great call on that inflection point up there.
Thank you. I actually have to give you credit, Dale. Every time you invite me on, something big is about to happen. So it's actually your planning is actually the one that I have to give full credit to.
I'll take it. Coincidence is my friend. Okay.
But yeah, I mean, every time I appear to come on, there seems to be some sort of macro inflection point. But this one was no different. Yeah, and it not only was it the potential bottoming on bond yields, which I called 2 days prior last time. It actually did happen.
Yeah, we were on the same page on that.
Yeah, and then this also did form. And up until that rejection started happening, none of this was potentially verified. So there still needs to be more confirmation, and I'll kind of go over it here in a little bit. But this is the first step of ensuring some sort of next move down can happen.
So is that last candle you have up there a monthly candle that's completed? That's October?
Yes, that was as of Friday.
Okay, so I'm gonna show you something I use. It's pretty powerful. It's a 2-candle reversal. So if you just count back from the candle that we're on right now, would probably be a November candle.
Correct.
That you're not showing.
Correct.
And then you just count back 2 candles, see where it closed on the month. That's going to be your reversal. Okay, so that's going to take in 8 weeks to the left of price action.
Correct.
So above that price, if we close above that by the end of November, I don't know what that close was.
Then this would have been essentially a bull flag, correct?
Yeah, like a 2-month reversal is what you had.
Yeah,
with the close in October.
I still believe, and I'll go through it towards the end, but I remember the last time I showed a bell curve, and it kind of showed the historical mean average of all the topping periods and how many weeks it took. And that's how I came up with that October 2nd to October 30th peak window. But I went back and I looked back, and every major dollar bottom and euro top had a secondary back test that went back and retested that one last time, typically after 2 full monthly contracts had expired, and they'll touch it once more, and then the final trend will confirm. So I still think there should be one more pop up here on euro, even if we have a downturn here. So it may be potentially a little bit early still, with a lot of election volatility and a lot of other things going on. It may be kind of the catalyst to kind of have one more pop here.
Yeah, I'm thinking of trying the long side around your 2 moving averages that converge are about 114 or so, if we get down there.
Yeah, I think for now, I think if we were to see a euro kind of confirmation retop, it would have to be at a descending. It would have to be a lower high, and if it were to see some sort of rejection at a lower high in the just above 119, kind of 119.2, 119.4, somewhere in that range. If we kind of see a top somewhere, or maybe 119.6, somewhere in that range, then that would be a signal. Okay, this could be potentially be an actual that final macro rejection, and that would happen somewhere between November 13th and November 20th. That's kind of the tightest window I can give.
I have someone else I interviewed was talking about November 14th.
Yeah, I'm seeing a lot of activity in post-election. There'll be a post-election calm. I think a lot of people are betting insane volatility. I think it's actually going to be neither up nor down. I think maybe we could have some kind of a pause or reprieve, and then all of a sudden mid-November. So I'm seeing a lot of signs something big is going to happen in mid-November. Okay. So that's just what I'm seeing in the data. Who knows what the catalyst could be, but it could be a lot of other things. Okay, and so the next chart is going to be the pound dollar. On this one, it's still holding the 13-day moving average support, but it went up and rejected. Last time we spoke, it was trying to break through the 50 monthly moving average, but then it rejected back down. very similar to this period in the previous green box. You see it and try to break out to the 50 many times. It failed to do so. If this pattern is to repeat exactly again, which is no guarantee, but if it were to, then in theory it suggests there may be one more drawdown to the magenta. But given how close we are to this purple line, I still think it may just try and go ahead and reject it now if it does, which would be that last kind of pop I talked about on euro. In theory, you should have, you know, a similar pop on the pound if we can get up there.
Okay.
But as of right now, the race to parity has not begun until, you know, this 13-day moving average, 13-monthly moving average right here fails. So for now, bulls are in control at the moment, barely, but they are in controls. So until that kind of 129 levels, you know, starts to show weakness, so far it's still good.
Okay.
And then on the pound euro, I know most people do euro pound, but obviously I like to do the inverted to kind of show in correlation with the rest of the theory that this major macro orange trend line continues to hold. It keeps getting pounded, but as of this point, it's still holding. So until that fails as well, you know, there's no race to parity yet that has begun. But if you look back here to the 07-08 period, you know, it kept hitting it over and over again, and eventually it ended up failing. And even, oh, sorry, I apologize. And even on the, if you look here on the MACD, yeah, it crossed bearish, and it crossed bearish at the center line, which is very important. It's often a major macro bearish reversal. So we're seeing the same thing here as of right now. So as of right now, it's saying there should be further weakness, but currently at the moment, I think we're getting one last possible dead cat bounce maybe, and then we'll see from there. Okay. So, but the most important part of the entire global forex parity thesis is that the pound has to, by definition, fall faster than the euro. So this pair needs to keep trending lower, and that needs to fail in order for any sort of, you know, global parity to happen.
And just for our viewers, Alex has it paired the opposite way that we trade retail
Correct.
euro pound.
Correct.
Okay.
It's only
ahead,
to
buddy.
tie in with the rest of the thesis, obviously.
Okay.
And then this is the dollar monthly chart, and as you can see here clearly, this long-term purple 10-year trend line continues to hold. And I said last time when I was on that lower Bollinger overshoots on the monthly chart are extremely rare. And the reason why I was so confident it was going to reverse is when I came on last time, we were right here, like the red had been touching the purple. And it seemed like, you know, dollar was doomed, but I was extremely confident that a bounce was coming because it's only happened one other time in the last 20 years. You know, even here it just touched, but this is actually the only real other lower Bollinger Band overshoot that we had, and obviously it bounced off there. So I knew at some point there had to be some sort of a relief rally on the dollar, and it also did bounce off roughly the 200 monthly moving average as well too, inter-month. So as of right now, it formed a nice green bullish hammer as of Friday's close on last month. Yeah. We should still see, if you look here, the 13 moving and the 50 are starting to converge and get real narrow. It did the same exact thing here during the 2014 period, but they never actually crossed. But it did kind of get stuck in this consolidation pattern for a while. I don't think it's going to last as long as this time based on kind of the activity I'm seeing. I think it'll be a little bit faster, but nonetheless, if you see, there's always a red, green, red, and green, and kind of that kind of red, green. So it would suggest that we still have one more back test as well on the DXY to confirm this is a bottom. And you're even seeing that kind of red, green pattern here as well too. So I still think there's one more retest of that kind of, call it mid 92 level range. Possibly maybe some volatility or something, or maybe, hypothetically, whoever wins, they say, oh, stimulus, there's this kind of immediate stimulus euphoria, which may not pan out. And so if you see some kind of all of a sudden you stimulus euphoria over the next couple of weeks after the election, but then, you get this drop back down, but then all of a sudden reality sets in, that would then establish that kind of secondary or tertiary bottom that we need to kind of move back up. So from there on, we're going to go to the Bitcoin. Obviously, Bitcoin's had a lot of activity since the last time we spoke. Last time we spoke, it broke out of that initial purple macro trend line. It popped up back up. I added these two macro resistance levels. This is the roughly 12,000 level or just above it. This has been a major resistance going back for quite some time. It bounced up to rejected off there, and then it's held this key magenta support, and then now it's broken through all the way up to the 14,000 level, which is actually where it peaked in July of 2019. So it's actually having a very healthy breakout. A lot of it's on the back of obviously some dollar weakness, but it's actually performing really well.
Yeah, I mean, I made the comment earlier, Mystery, that with risk off and a strong dollar and even weaker metals, the relative strength was in crypto last week.
It actually was. Yeah, last 2 weeks. This is a weekly candle, so
Yeah.
so this 2 weeks period really had a lot of strength. Now with DXY potentially bottoming here, could this green hold? This is a previous rejection level. That's a possibility. It's already at the It's at the upper Bollinger right now, so this temporarily it's kind of being capped. But
could you see a pullback to $9,000? That's kind of what I'm looking for from here.
That's right where the close, right around the 50 moving average on the weekly. So yeah, I could entirely see that. That's not out of the question.
All right, buddy.
But yeah, so this is obviously it's good for crypto, but at the same time, if we do get some kind of a huge dollar ramp, that would weigh on basically all commodities, including crypto commodities. So it's the same. I kind of bunch them in with the same category now. But for now it's doing strong. So the real key level is 14,000. That's your real kind of line in the sand. If it can really build enough bullish pressure to break out, then it may have more to go. But if it puts any sort of topping tail on a closing basis this week, then you'll know maybe time to kind of lock in some of those gains.
Yeah. Okay.
Bond updates, U.S. Treasury yields. Last time we spoke, was the purple arrow. That was the week we spoke, and sure enough, It was exactly where it bottomed. I had said 2 days prior we had that kind of 40 basis point low, and I said to me that looks like that's going to be a short-term bottom, just because the lower Bollinger was so flat. I said that was the real reason, and of course that ended up holding. We're seeing a very similar MACD pattern back to kind of 2012. And I'll actually discuss this in a little bit. I did some QE analysis from quantitative easing, but you can kind of see this kind of ABC macro pattern. You had a big A wave and then a B wave rejection of the 50 and then down to the bottom. We kind of have the same pattern. We had an A wave, a B wave rejection roughly around the 50 moving average and then back down. So now it's in this kind of choppy bottoming pattern, but it can be stuck here for, over a year. This one lasted from July to July. So we still have plenty of time, given how this one started roughly March, April. This could actually go into the spring, but it did have one final rejection at the 50 moving average before it came back down and then started to, so we still have a bit of ways to go. I did say at that time that I thought it was going to be relatively lower for longer, but that if there was a breakout to the upside, it would indicate that inflation was actually starting to seep into the system and starting to kind of leak into the system. And anytime you have that, that secondary bond yield spike, that'll often hit big tech, which obviously it did in the past week or so. And it can hit other asset classes because sometimes, people view rising bond yields. Yields, not bonds, bond yields, as a possible warning signal. As of right now, there is some inflation leaking to the system, but as of right now, I still think it's going to be relatively depressed in the short term. But
we look for the reasons. Could it be with what has gone on, and really the Fed is the main buyer of treasuries across the whole curve? Auctions haven't gone well, so
they have not been very stellar.
Demand, we could have rates rise just because there's poor demand for more supply coming on the market, right?
Correct. And so my contrarian thesis to that is if in fact, and I'll get into this later, but depending on who wins the election, it will have a material impact on the timing of bond yields, because if stimulus for whatever reason gets delayed after the election, that's when you would see yields come back down, because then it would imply that the new issuance is not coming as rapidly as originally anticipated, because right now everyone's pricing in basically guaranteed stimulus right after the election, no matter who wins, which to me, I actually don't think that's necessarily going to happen depending on the outcome, which obviously we don't know right now. But for now, it's still going to be below the kind of 100 basis point level for some time. And I still think there'll be at least another rejection if we get back up there. And keep MACD is still rising, kind of similar to how it did in 12.
Yeah.
And QE2 was in late 2011, and then by mid 2012 QE3 happened, and then it started to come back out. So
I really like the way you go back in time to find market analogs, and just want to say that you're a hardworking guy to spend the time to go back in history, trading history, to find these things. I know it takes time and
thank you, Dale. I appreciate it. It is a lot of work. It's a lot of number crunching. It's a lot of back testing. It's a lot of.
So one thing I'll say about you, you're not lazy.
Thank you, Dale. Really appreciate it. But I think I like to look at historical analogs because ultimately, on a short-term basis, a lot of it's noise anyway. So the longer your time frame, the more you can kind of filter out a lot of that noise, and more importantly, human nature ultimately doesn't change in the long run.
Yeah,
we're very same. I mean, we're going through a pandemic that's literally following the exact same trajectory curve that it did in 1918, even though technology's changed, healthcare changed, everything changed. But what happened? You had initial primary first spike, then you had a lull during the summer months, and then the second spike was actually much larger than the first, and then that ended up being the really big one. And sure enough, like that's exactly what's happening in Europe now. Considering all the things that have changed, ultimately human nature hasn't changed. So to me, when you look at these long-term historical analogs, I think you get kind of more of a you're able to filter out the noise a lot better and just focus on the actual data. So that's why I like to go look back in history, and especially with momentum indicators, because it kind of gives you a sneak peek. Okay, what happened the last time momentum indicators were doing this, and that kind of gives you, at least some basis to go on.
Okay.
Okay, and then we'll do a gold update. I actually made a lot of changes this time. This was the previous chart I showed last time, but it didn't have any of the actual QE lines. So these vertical lines are actually to give a bit of a historical basis on, now we're in a very liquid kind of quantitative easing phase in the economic cycle. And when QE1 first started, which was back in December 08, this is what happened to gold. And you could clearly see from there, it really started to run and have a huge spike. And then QE2 was right around late 2010. I think it was about late November, November 25th, 2010. And then from there, you saw gold have a secondary boost. QE2 actually ended a month before gold actually peaked, but it ended up actually marking the top of the cycle. And then during this period, they were talking about QE taper, this and that. Well, yeah. QE3 actually ended up happening right where this final spike is in roughly September of 2012. But you can see it was actually a buy the rumor, sell the news event. It actually ended up peaking once QE3, even though QE3 had just started. By the time QE3 ended, what happened, ultimately to the gold price, it took a big hit. So this is kind of showing the impacts of quantitative easing and stimulus on gold's pricing. And if you compare that to now, this is where QE4, which is what I'm calling it, started, was obviously back in roughly in kind of the March timeframe. It's actually right here. So where it peaked here and then it bottomed at the 13 moving average, that's actually where it officially passed. I just moved the line over a little bit so you can actually see it. But you can see what happened. But it's important to note that QE4 was many magnitude times larger than QE1 and 3 combined. Right. So although it's had a great run and it's had a great move, it's been relatively muted compared to what it had been historically. And as of after the previous time I was on, I started seeing some odd signals that it's possible on the interim term, in the medium term, if the global Forex parity starts to actually pan out here and DXY has its final macro bottom, gold is going to face a period of softening. It's not the end of the bull. It's not the end of the world. And I'll show in the next chart on a mathematical basis. But it is important to note that there are these periods where there is kind of a cooling and softening before you have that kind of next surge back up. And if we look at the MACD here, it's actually starting to peak out roughly around the same level it did last time. And if you also coincide with the RSIs, the 3 RSI peaks in the red circles, those all marked major either medium term or interim term peaks in gold before it had some sort of protracted consolidation. Now, last time I thought that if the 50 daily moving average had held while DXY was getting that secondary bounce and there was a second pullback, that would be enough to kind of launch it up all the way to 2237. But right now, it doesn't look like, at least on this cycle, that it may happen as of yet. But anything can happen. If there's more stimulus, then yes, that's enough to ramp it back up to that upper blue line. But really, I've been saying on ChartScope for some time now, without that secondary stimulus, gold is at risk of a pullback. It really needs that fiscal stimulus to come through in order to really push it up to that final target. But as of right now, it is starting to show some signs of softening here. In the short term. And then in this next chart, this is actually the gold DXY ratio, which I showed last time, but this time I kind of added some new, here's the new line that I added. This is actually the 22.5 resistance. When we spoke last time, it was just about to clip this blue line. It was just before it did. So that was back in August 11th. And this has been a historical major resistance going back. It topped here 1, 2, 3, 4, 5 times on a closing basis.
You make anything out of it, Alex, that that gold has surpassed the 2011 high, and this ratio is a lower high?
That's actually what I was about to say, is that if you look, the RSI had huge peaks at all these 3, and then they ended up pulling back. Now, taking a step back, the reason why I'm showing this ratio is if global forex parity is going to happen, which I believe it is, I genuinely believe it is happening, you're going to have a softening period during that huge DXY ramp. And during that period, this ratio will especially get hit hard because it's a ratio of dollar versus the DXY. So not only is gold going to be going down, but dollar will be spiking. So you'll have some sort of a aggressive pullback. But I believe after DXY hits 109, when it gets up there, roughly that level, that high 100s, that it's going to actually be the best entry longer term for a super bull in gold. Because at that point, I do believe that's when you're going to have to finally, the reaper's going to come for all this debt monetization. At a certain point, gold is going to have to rebalance. But as I said in the last few presentations, until there's a unified global currency, the U.S. will not allow the dollar hegemony to be challenged by having gold go vertical. So it's not until you have some kind of fixed global singular monetary unit that gold will actually be able to trade freely. So until
how about next spring?
I think we're going to have the ramp. Well, I think we're going to have the ramp up to 2021, but I don't think the actual that huge bull is really going to start until 2022. So I think it's going to be pushed off, I think, a little bit further, or late 2021, maybe Q3, Q4. But it's not going to happen right away. It's going to take some time for that dollar ramp to happen. But if you notice here, if that is that theory, it could actually be a very similar pattern to what we have here, where 08, it had a big pullback back down during that huge ramp, and then it really rocketed up. So to me, I think this is actually a great analog for what we could actually be going through. And we may actually be going, if you look, there's a red shooting star here. There may be some sort of a softening period in the interim term while that dollar ramp happens. And then this entry down here is where is kind of an analog to what I would view that late 2021, early 2022 macro bottom before it really just starts ripping. So this is kind of on a more macro time sense. Now, for those that are short-term traders, the only reason I bring that up is just, be wary that, make sure you have your stops in place, because there is a possibility we do have some sort of a softening pullback. And every, RSI peak did result in at least at minimum a pullback to the 13 moving average, if not the Bollinger Center. And if you look where that is, the ratio would definitely be much lower. And it could even pull back all the way to this kind of 15 level, which is the 50 moving average. And if we did, a reverse calculation, and you did gold, you reverse calculated, if DXY hits 109 and it gets back to a mid 15s, you're looking at a low 1700, 1720 1740, somewhere in there. So it's not necessarily going to be a catastrophic pullback, but it is, you could have, you know, a more substantial pullback.
Okay.
And then how does this all kind of tie in together? And I actually made a lot of updates on this final chart. This is actually kind of shows the entire dollar bull channel, but then I overlaid every single gold peak and trough to kind of give some relative perspective, because a lot of people say, you know, say, you think, you know, the DXY is going to go 109? Does that mean dollar's going to go to $500? Like, no, of course not. So I try to put these. Last time I came on, I said that the gold had officially broken the DXY inverse relationship on a direct basis, which is actually, I added this new vertical red line. Up until everything before this red line was essentially, everything was starting to make kind of mathematical sense. But after that, things have kind of skewed as gold really has started to kind of resurge in the global monetary order. But if we look here, the previous all-time high was at 1920 back in 2011. Then we had a kind of a bounce, and then when it retested this, when the dollar, the DXY retested this a bull channel support, which was the 2014 bottom, gold was, by at that point, had already dropped back down to 1346. Now this huge DXY ramp up all the way to the, at that time was about 100 roughly. It looks massive, but on a gold basis, it actually only hit gold $300, almost exactly. So it went from about 1346 to 1050. Yeah. And then from there,
that was it.
Yeah, that was it. And then from there, from 1050, once gold had this, you know, pullback to the bottom of the channel, roughly, not quite, but close to the bottom of the channel, it went back to roughly 1360. So that's when it was in that kind of 5-year consolidating pattern. It kept kind of chopping around there for 5 years below 1350, 1360. And then once the DXY started spiking again, it dropped back down to about 1160. But then from here, if you look, all of a sudden from 1160, the DXY kept going up, but gold just went vertical to 1730. So this is kind of where the relationship broke. So everything before kind of mid 2019 and after 2019, you kind of have to compare with a grain of salt. They're not really, it's apples and oranges. But the reason why I'm showing this is, well, we recently, you know, pulled back from went from 1730 all the way to 2100, but even just in this small secondary bounce, we're already back to, you know, in the 1880s right now. So you can kind of see like the same pattern forming, you know, if gold, you know, or the DXY runs all the way up to a high 109, 110 kind of level, well, you could probably expect at least a 300, 400, maybe $500 drop from the recent peak, but don't expect much more than that. You know, I think it's kind of put everything in perspective. But even the middle magenta line right now is already at a 103, so that kind of shows you there is now there's a huge window to the upside that's potentially setting up here. But it's important to know, you know, like during this period, all commodities across the board are going to face, you know, headwinds, you know, some more than others. But a lot of the base metals could potentially get hit, maybe some of the agricultural commodities. So you got to really be careful from a commodities basis. But the reason why I'm showing this is if we get, you know, if this pans out and we end up having this huge 2014 style ramp all the way up to the top of the channel, this is where this top of this channel is where you want to be loading up on all kinds of commodities. Yeah, because that's going to be a long-term risk reward reversal back to the downside for the dollar, but upside for commodities. So I think as of right now, this is kind of, you know, if you look at the MACD here, we're seeing a very similar pattern. We had a long kind of this sign consolidation, and then it fell below, and then we had a bull cross, and this is where the consolidation happened before it started to run.
What a great presentation.
Thank you, Dale. I appreciate it. And we
also ever got applause. Anyway, my trading warrior brother really, he could be your best.
So and one quick thing. So in this lower stochastic, it also bottomed here when that started to happen. So we're seeing a lot of confluence that this is going to happen. And then I was going to say, this is the chart I showed last time, which just showed the historical kind of bell curve average of all the euro tops and dollar bottoms. And the average between 9 and 17 weeks. We're kind of slowly starting to approach that kind of 12 to 13 range. So could we get a couple more weeks? Yeah, it's possible, but we are getting close to some sort of macro inflection point here soon. And then last bit is the election part. I just want to do a potential, again, full disclaimer. I don't have any political biases. I'm not a Republican or Democrat. I'm not a libertarian. I'm not any independent or anything. To me, I'm not a political person, but it is important to understand the political implications or what impacts they'll have on financial markets. So I'm going to cover both completely dispassionately, but to show what are the potential outcomes if one or the other wins. And so, again, this is purely just a hypothesis, but this is what I believe would happen if Trump were to win. It would actually be the cleanest of the two outcomes, because more than likely stimulus would come faster than if Biden won. Commodity sectors would definitely get a boost, because I believe that stimulus will be coming faster. And anytime stimulus comes, all commodities, like a rising tide lifts all boats, it would push all commodities up. There wouldn't be any chance of a contested election like 2000, so it would kind of eliminate that market risk. There wouldn't be a lame duck period for them to stall further stimulus. It would be more risk on for equity markets, I believe, as markets would kind of, not quite a repeat of 2016, but it would definitely be a positive tailwind for the markets. In many ways, it would be kind of business as usual as it has been. The risk are, maybe some social issues. There might be some riots or something due to some disgruntled voters. And there would definitely be more DXY initial softness than Biden, because that perceived faster arrival of any sort of stimulus. Now, if Biden were to win, I think it's actually short term, it may be uglier of the two options, but after his inauguration, it would actually potentially be better. But initially, you get maybe the first week or two, you may get a pop, but it'll fade after. I do see some sort of piecemeal stimulus possibly being passed between him, the election, and if he were to be elected, it'd be inauguration. But that's a 2.5 month period, and that's an eternity in financial markets. I do believe Democrats, they'll control the House. I don't think they're going to get the Senate, but I think they would more than likely delay any major, multi-trillion-dollar stimulus until he got in, because they would want to give him credit. They wouldn't want to give it to Trump. So they'd probably do some sort of piecemeal band-aids just to kind of hobble it over the finish line until he gets in. The bigger risk, though, is if he wins, how does President Trump react? Would he actually try and do a contested election like 2000?
Yes.
And that's that is the consensus, and probably an accurate one. I think for those of us that old enough to were trading at the time, I remember vividly my mentor at the time, actually the one who taught me everything. He said, "Alex, watch this. If this goes contested, it's going to really hit markets." And sure enough, that ultimately was really the pin that pricked the bubble that was the .com. It wasn't anything financial. I mean, everyone says PE ratios, and yes, they were sky high, but really it was the contested election that was causing a lot of unknowns, and kind of there wasn't any certainty in the marketplace, and that's what caused ultimately for it to eventually roll over.
And the big difference, buddy, is that Gore took a bullet for America.
He did. I mean,
he took a bullet.
Yeah,
I mean, he did okay. It worked out for him.
No, I think personally, I don't think did a lot better.
Yeah, he probably did financially.
Yeah,
but I don't think that Trump is Gore.
No, I think
it's contested. So
no, he won't lay down, more than likely. But hypothetically, if this scenario would play out, what really is the risk to financial markets is the lame duck. Yeah. And for those that aren't aware, that aren't American citizens, lame duck is the 2.5 month period between when an old president is defeated or it finishes second term, and then the new president gets in, which is usually around January 31st. So call it February. During that period, very little gets done legislatively, if not nothing. And if Biden wins, and this scenario would be that they would a lot more than likely delay any major stimulus bill of 2.6 or 3 trillion or whatever they may do. that would be pushed off more than likely. In many ways, it would be kind of like a Bush-Obama transition. You know, as Bush was leaving, the markets were collapsing. Then once Obama, the markets financially didn't really bottom until after Obama had been inaugurated, and then major stimulus passed, and then from there the markets kind of rocketed higher.
Which Biden muscled through with Paulson.
Correct.
Something to keep an eye on during a lame duck is the Peking duck.
What's the Peking
and I'll
duck?
let you. Where's Peking?
Oh, but yeah. So the reason I think the lame duck is, I really think the lame duck session is important. Is that, well, why is that delay of 2.5 months important? Well, during that 2.5 month period, if we don't get stimulus, DXY is going to face a lot of upward pressure.
Yeah.
And commodities will get hit across the board. I think gold.
So will Taiwan. And with that being said, bro, I'm telling you, you are really good. You're a really excellent presentation. And, we could probably do this for a few hours. Do you think this completes your narrative, or we can keep going on with this series?
I think we're entering the final phase. I do think we need one more retest of that upper line on the euro to reject, and one more DXY to bottom. I think if we do, then that'll be the real kind of deciding factor. So I still think we need one more, but if we get that final one, that's a sign for you to start scaling in. And obviously, this is, my charts coach is my platform for those of you that were interested and want to learn more about kind of my theses and stuff. I've launched a lot of new financial calculators, a bunch of stuff on the platform. I cover pretty much everything there is to cover. And then recently I just launched my new audio podcast on the platform exclusively. The first episode is now live. It's a 60-minute long episode talking about the electric car revolution. It compares lithium-ion battery tech to all the new potential disruptive technologies, to kind of go through and say what are the biggest threats to Tesla Motors. And I actually talk about one that could potentially be the biggest threat of all, and it's the last one you'd expect. And they're doing an IPO hopefully here in the future. So I kind of, if for those of you that kind of want more kind of other topics, I do a lot of audio podcasts other than just Global Forex Parity. It kind of goes through, and so what that new audio podcast will be as a part of the platform. For those of you that are more interested, you can always kind of sign up and see some alternate content that I produce as well. So
sign up.
I really appreciate it, Dale. I think
sign up for Alex. Sign up for Mystery.
I really appreciate it, Dale. But yeah, I think it's going to be an interesting. This week is going to be a lot of vol. And for those of you that I've been telling everyone on Charts Coach for the past, I actually told everyone on Charts Coach roughly 3 weeks ago to move to cash, because I saw a lot of vol coming. And honestly, for those of you that are in the options game, we've never had such a high VIX at such a relatively high market valuation. So basically right now it reminds me of the old Matthew Broderick movie from the 1980s War Games. Sometimes the best move is to not play at all. And from an option standpoint, the best thing right now is just stay liquid, be in cash, and be selective and picky, because right now I think market makers are taking a lot of these Robin Hooders to the cleaners, and they're just completely robbing them blind. So prudence
over valor from Mystery Trader 99.
Yeah. So, but Dale, I always want to thank you. I always enjoy our chats, and I appreciate you giving me the pre-election slot. That was a huge honor. So thank you so much for that. And hopefully we'll have another chat here soon. Well, it'll be interesting to see what happens given, post-election, the results, but hopefully some of these guidelines help guide you through the really volatile period coming up here in the next week or two.
They help me. Thank you for showing me some things that added conviction to some of my ideas and opened my eyes to some new things. Appreciate it, my trading warrior brother.
Anytime, Dale. Thanks again, brother.
Okay, buddy. So that's a wrap, everyone. We'll see you for Election Tuesday. Turn around Tuesday, spin around Tuesday. Don't just count your pips, count your blessings. We'll see you all tomorrow. Adios.